What if the IRS owes you money and you don't even know it? I'm not talking about your annual tax refund. I'm talking about money you overpaid in previous years that's just sitting there waiting for you to claim it. Today, I'm going to show you 3 clear signs that you've been overpaying the IRS and what you can do about it. Here's something most business owners don't realize. Just because you filed your taxes and paid what your accountant told you to pay doesn't mean that was the right amount. In fact, every single year, millions of business owners overpay their taxes because they miss deductions, overlook credits, or simply aren't using the right tax strategies. The crazy part? You can go back and fix this. The IRS allows you to amend your tax returns for up to 3 years, which means if you overpaid, you can file an amended return and get that money back. But how do you know if you overpaid? That's what we're covering today. Sign number 1, you've never had a tax strategy review. Let's start with the most common sign. You've never had a comprehensive tax strategy review. Here's what I mean. Most business owners work with an accountant who handles their bookkeeping and files their taxes at the end of the year. That accountant takes the numbers you give them, plugs them into tax software, and submits your return. They're focused on compliance, making sure you don't get audited and that everything is filed correctly. But here's the problem. Compliance is not the same as strategy. A compliance-focused approach means you're only claiming the obvious deductions. You're not proactively structuring your business to minimize taxes. You're not looking for credits you qualify for. You're not optimizing your entity structure. You're just doing the bare minimum to stay compliant. A strategic approach is completely different. It means looking at your entire financial picture, understanding your business operations, and identifying every possible legal way to reduce your tax burden. If you've never had someone sit down with you and say, let's review your business structure, your expenses, your investments, and your long-term goals to build a tax strategy, then there's a very good chance you've been overpaying. Think about it this way. Would you rather have someone who just files your taxes or someone who actively looks for ways to save you tens of thousands of dollars every year? That's the difference between compliance and strategy. Sign number 2, your tax bill keeps going up, but your strategy hasn't changed. Here's the second sign. Your revenue is growing, your tax bill keeps increasing, but your tax strategy hasn't evolved at all. This is extremely common. A business owner starts out making $100,000 a year. Their accountant sets them up as an LLC, they file a Schedule C, and everything seems fine. But then the business grows. Now they're making $200,000, then $300,000, then $500,000. But guess what hasn't changed? Their tax strategy. They're still operating the same way they did when they were making $100,000. They're still paying self-employment taxes on all their income. They're still not taking advantage of entity structure optimization. They're still missing out on credits and deductions that only become available at higher revenue levels. Here's the thing. As your income grows, your tax strategy needs to grow with it. What works at $100,000 doesn't work at $500,000. For example, at lower income levels, being a sole proprietor or single member LLC might be fine. But once you're making $150,000 or more, you should probably be looking at an S-Corp election to save on self-employment taxes. That alone can save you $10,000 to $20,000 per year. Or let's talk about retirement contributions. At higher income levels, you can contribute significantly more to tax-advantaged retirement accounts, but only if you have the right plan structure in place. If your tax bill has been climbing year after year, and nobody has sat down with you to talk about restructuring or implementing new strategies, you've almost certainly been overpaying. Sign number 3, you've invested in your business, but didn't claim all the benefits. The third sign is a big one. You've made significant investments in your business, equipment, technology, process improvements, hiring, but you didn't fully capitalize on the tax benefits. Let me give you some examples. Let's say you bought new equipment or vehicles for your business. Did you take advantage of Section 179 deductions or bonus depreciation to write off the full cost in the year of purchase? Or did your accountants just depreciate it over several years, meaning you're spreading out the deduction when you could have taken it all up front? Or maybe you've been developing new processes, improving operations, or creating proprietary systems. Did you know that might qualify you for R&D tax credits? Most business owners think R&D credits are only for tech companies or labs, but that's not true. If you're innovating in any way, improving efficiency, developing new methods, creating custom solutions, you might qualify. What about hiring? If you've hired employees from certain target groups, you might qualify for work opportunity tax credits. If you've provided health insurance, there could be additional credits available. Here's the reality. Every time you invest in your business, there are potential tax benefits. But if you're working with someone who's just doing basic compliance, they're not looking for these opportunities. They're not asking the right questions. They're not digging into the details of what you're doing in your business. If you've made major business investments in the last 3 years and your accountant never asked you about them in detail, there's a good chance you missed out on significant tax benefits. What to do if these signs apply to you? So if any of these 3 signs apply to you, what should you do? First, don't panic. The good news is you can fix this. You have 3 years from the date you filed to amend your return and claim refunds for overpayments. Second, get a strategic tax review. This means having someone who specializes in proactive tax strategy, not just compliance. Look at your past returns and your current business structure. Third, take action now. Every day that passes is one day closer to that 3-year window closing. If you overpaid in 2022, you need to amend before the deadline or you lose that money forever. Here's what I want you to do. Visit our website and book a free call with one of our tax strategists. We'll review your situation and let you know if there are opportunities to get money back from the IRS. Don't leave your money on the table. Thanks for watching, and I'll see you in the next one.